Good evening and welcome to your finance report. I'm Jalal Ahmed. Tonight we're looking at two big stories, the state of the housing market and a major court loss for one of Australia's best-known fast food brands. Let's start with property. Australia's housing market is showing clear signs of cooling. House and unit prices have come down from their recent peak, with cities like Sydney and Melbourne now sitting well below the highs they hit earlier this year. Auctions are getting harder to sell too. The national share of auctions to new listings has dropped sharply, from almost 45% late last year to just over 30% by the middle of this year as buyer demand softens. Image 4. But here's the catch. Even with this slowdown, price growth is still outpacing both wages and inflation. That means for the average Australian, owning a home is getting harder, not easier, even as the market technically cools. Higher interest rates, cost of living pressure, and proposed changes to negative gearing and capital gains tax are all weighing on buyer confidence, especially in Sydney and Melbourne. It's a two-speed market right now. While the bigger capitals slow down, cities like Perth, Adelaide, and Brisbane are still seeing solid growth, supported by strong population increases and a genuine shortage of housing supply. Meanwhile, renters aren't getting any relief. Vacancy rates remain near record lows, and rents are still climbing, adding even more pressure on household budgets. So the bottom line, prices may be easing off their peak, but affordability is not improving. Wages simply aren't keeping pace with the cost of getting into the property market. Now to company news, and it's a rough day for Domino's Pizza. Shares in the company fell after Domino's lost a major underpayment class action in the federal court. The case goes back years. It was brought by a former Queensland delivery driver who claimed Domino's directed its Australian franchisees to pay staff under outdated enterprise agreements instead of the correct industry award, meaning thousands of delivery drivers and in-store workers were underpaid between 2013 and 2018. This week, the federal court ruled that Domino's engaged in misleading and deceptive conduct toward its own franchisees over how staff wages should be calculated. For the lead applicant in the case, the court assessed his personal loss at just under $12,000, plus interest. But the real story is what comes next. The potential payout to the broader group of affected workers is still unknown and could run into much larger numbers once further hearings determine which stores and employees were impacted. Image 10. For investors, this ruling introduces real uncertainty. There's no confirmed total liability yet, and Domino's may also appeal the decision, but the market clearly doesn't like the risk, reacting by selling off shares. It's a reminder that legal and compliance risk can hit a company's share price just as hard as a bad earnings report. Image 11. So to wrap up tonight, the property market is cooling on the surface, but affordability keeps getting worse underneath, and Domino's is facing a costly legacy issue that could weigh on the stock for months to come. That's your finance report for today. I'm Jalal Ahmed. Thanks for watching, and we'll see you next time.